Okay, folks, welcome to Market Trends. I'm David Russell, VP of Market Intelligence at TradeStation. Great to be with everyone. We do this every week on Thursday at 2 Eastern. Go to, if you need to, excuse me, today's materials, if you go to tradestation.com, and then on the top right, I'm just showing you disclosures now. You go to tradestation.com, and then you go in the top right, there's a research tab on the far right, and then there's a link that says Insights. If you go to that, it will bring you to the Market Insights blog. And on that blog, we have the materials for this webinar, some downloads. We actually got a cool thing. One of you guys requested something and I was able to access it. It's an anchored VWAP, which is now available as well. I'm not going to explain it today, but it is available on Market Insights. If you go and you look at the top article, it has a sign with the Wall Street like street sign on it. Great to be with everyone. If you have any questions, please use the chat. Don't use the thing in Zoom where we're raising hands and stuff. Just send me a message in chat. And all right. Great. Let me just close this. Now I have. Now, if you go into, so basically if you're on TradeStation, go to research and go to insights. And then go to this article. And we're going to work our way through this article. This is essentially the materials we're going to cover today. All right, this is my workspace right here. Let me bring it over. Now, I like to keep a little bit of space at the top so I can navigate to my the internet at the same time. All right. So if you go into this here, all right, so we have here a series of downloads. These are all different zip files. So each month I'm going to be updating it. And then as the month goes along, I add more stuff. So this will kind of increment along. So the anchored VWAP and the thing I created called Keltner pullback are available in this. This one was a barred number. It was a few other indicators you guys had asked me about last week. And then there is the main one, which is here. Once you load the main one, you're going to see something like this. You're going to go in and it's going to have a series of zip files in it, a series of ELD files. Those ELD files here have the key information, things like the key indicators. Once you have those, you want to like double click on them. It'll bring this dialog up and you say, accept, which I'm not going to do because I already own them. But once you have those imported, then you can load the workspaces, which I have down here. And that's how it works. Wait, for some reason, let me just remove this. Close. No. Sorry. I had a thing when I had two desktops open and it got confused. Deep breath. And in fact, let's start with market trends breadth because it gave a really interesting signal yesterday as I put in there. This is a signal that I've discovered. I'm sure other people have found similar things. And but it's been a very interesting one. So actually it's not, here it is. All right. So go to the workspace called MT breadth, market breadth. And this is the number of companies in the S&P 500 above the 20-day moving average. And this is the number of companies above the 50-day. I have noticed that each time there's a crossover to the upside or downside, the market makes a subsequent move. So you can look back here like in September, you can see that the cross happened. And yeah, the market struggled for a while, but it really didn't. I mean, after it made that cross, it really didn't make any more lows. So at this point in time, look at when this, like back here on October 13th, the market had that kind of capitulation. We already had internals that had been much more positive and it just dragged the market higher. And then if you look here, it was already weakening and these rallies just died. And now we had a cross. Look here, we had that cross right here. And I talked about this on Market Insights and Market Trends at some point through here. I was mentioning how we had lost this breadth. So this is a really interesting indicator. TradeStation has all these great tools in it. Now, something even more interesting, go to the Qs and you can see that this happened earlier. The Qs have actually, the NASDAQ has been giving some really interesting signals, and I have some things I want to share about that. Actually, we go here to the stuff that I do for TradingView. I did this article today, and I think this was huge yesterday. I was looking at it and I was just like, this has so many potentially positive signals. I looked at these yesterday. I'm like, no matter what happens, I think the pressure's to the upside on Thursday. So if you look at this right here, I mean, there's a lot of patterns here. This is the NASDAQ, but just consider here that we basically had this, we know about breaking this trend line. You have a golden cross right here, right? And then on top of that, you had bullish outside day. Look at the Qs. The NASDAQ was at its 21-day exponential moving average. Now, if you look at like the SPY or something, let's go here to MT Main. Look at something like SPY. I mean, SPY was nowhere near it was under its 8-day exponential. It was under its 21-day. The same thing for the small caps, the same thing for the Dow. They were miles underneath these short-term moving averages. Then you go to the Qs and it's literally at that level. This was the signal yesterday. This bullish outside day. It was very interesting. So if you look at the things here that we're in, then we published this morning. So these things are always going to be available on Thursday morning if you want to check market insights. Look at this downtrend, and now look how we held above it. Okay, this is a downtrend this is the S&P, remember, so this is a different trend line, but it's a similar idea. Bearish momentum from last year, we broke it, came down, and then we didn't go back under it. We're kind of holding it. This was the close yesterday, so now we're up somewhere over here. We're bouncing at it. This shows the same pattern. So I published it. I wrote this all last night, pointing out what was coming. So these are some interesting signals, and these are included in what you get with the market trends downloads. So I want to just emphasize that. There's just a few things happening here that I think are, it's just, let's look here at the thing that really matters. Well, I don't know, everything matters, but we have lost 100 basis points of Fed hiking, pretty much in the last, look at this. A week ago, people were expecting up to 6% by July. Now, by July, they're looking at 4 3/4. So we lost over 100 basis points of Fed tightening. Now, of course, this is all projected from the CME, so it is what it is. But the key thing is that this is what the market sees. And I think ultimately, it's kind of like, I think when you, if you buy a house and you don't like something on it, and oops, I broke the door by accident, and now I have a chance to go replace the door. That's essentially what this whole thing with Silicon Valley Bank was. It was just an opportunity to basically break something that we didn't like anyway. And the thing we didn't like was the Fed raising rates. And now we basically have a situation where the Fed is going to cut rates. Now, of course, we have no idea what the Fed is going to do, and this is by July. But the point is that the major headwind facing the market was the Fed, and this banking crisis essentially removed it. Meanwhile, and I've talked about this a lot, if you go to the different market trends each week, if you actually just click on this thing, there's market trends. I have been promoting, or not promoting, but I'm just saying, we were talking about last week, the artificial intelligence story and what it means for semiconductors. AMD, the semiconductor story, artificial intelligence. What do we get today from Microsoft? I mean, did anyone see this thing today on Microsoft? This is so big. I can't even, this is going to be one of these stories. I'm just going through stuff and trying to kind of. All right, so Microsoft is going to roll out ChatGPT in Word. And this is like when, the iPod came out or whatever, this is something that takes a technology that has been in the realm of developers and it moves it to the realm of ordinary people. And That is what's happening here. So let's take a look. Let's really think about what this means. Look at Microsoft. Let me just get this order. All right. So Microsoft, AMD, NVIDIA, Arista Networks. Remember this one? Talked about this last Market Insights. The market crashed and this thing was sitting at an all-time high and it didn't even go down to its 21-day EMA. It just hit the 8-day for like a day and here it is. So this is what's happening now. And the thing is that we were tired. I was tired, at least, of cloud computing. I was tired of online advertising and how great it's going to be, and Netflix and all these, Kathy, I don't know, whatever, all these silly, tech stocks that didn't make any sense. But now suddenly take a step back and we have a narrative and growth that makes a ton of sense. This AI thing is, the market is just looking at this and saying, all right, tech has been dead for the last 6 to 12 months. We're tired of the narrative that we've had. We're tired of e-commerce. We've heard that before, been there, done that. But now suddenly AI, this is real. And this is something that it's not only real, but Microsoft is putting it in, probably, I don't know if it is. I mean, I'm not an expert in this, but you got to think Word is probably one of the top 3 or 4 programs in the world that's now going to be available to everyone. AI, this is the moment we're going to look back on. And let me find the article. I believe that this will be, you're going to look back and say, what are the big stories of this year? It's not going to be Silicon Valley Bank. It is going to be, I'm sorry, I didn't save this one. I'm going to get it though. Microsoft doing this. This will be a story you look back on. It's like when the Beatles played Shea Stadium, or when they those famous old tech things, when that Mac commercial from the 80s, or when Microsoft released Tetris in it, or Windows or whatever it was. I think this has the potential to be something of that magnitude. And when you think about it, the place that people are going to be nailing it or focusing, the semiconductors, some of these companies like Arista, this thing is taking hold. And then you throw on top of it, the Fed expected to pause, and suddenly what looked like a really horrible situation suddenly is a breakout in the Qs. And I think the thing that's important, look at how the relative strength, this is the relative strength that was building. This is the trailing 3-month relative strength. So now if we jump over here, now we were talking about this on trading on Market Trends a few weeks ago. We were talking about the rotation to growth stocks. You can see it right here. Now I'm in the MT Main TETFs. Go to your 63-day. What do you see here on a trailing 63 days is 3 months. That's trading sessions, not calendar days. What are our leaders? Semiconductors, software Qs, growth over value. Okay, where's the SPY? It's at minus 2% in the last 3 months. The Qs are at plus 6%. Now, a lot of this is today, but this was true before, and we know it was true before because we had this. So I'm pretty sure it was the last time. What did we do? Relative strength. That's what we did last. So this is exactly what I was talking about. We showed you how to use a relative strength indicator built into TradeStation's award-winning platform. And this was something that was showing right here. Everyone, you turned on the news yesterday and you would have thought that it was like, 29 or 1930 with bank runs and stuff. And then you look over at the Qs and it's like, maybe not. So I want to just emphasize that. Things like relative strength tell us something. Things like the location versus moving averages, they tell us something. They're not like end all be alls, but there are patterns that were emerging that were not nearly as negative as people thought. So a lot of these things were available with these tools that we cover in this webinar. Sorry, I just wanted to kind of talk about that because for me, I just don't care what people say. I care what the charts say, because anyone can say anything. And all right, some other things. This was actually, I don't have it on this chart, but this is approximately this low. Let's take a look here at the SPY again. Let's just do a quick Fibonacci retracement here. Go Fibonacci price retracement lines. Let's look at this low here to here. I'm sorry, here to here. What'd I do? I apologize. All right. So if I go from the low of October, right, to the high of February, 50% is right here. Boom. We held that. So that's another thing I think that's interesting on the chart. Now, let me be clear. I mean, right now we're at the top of kind of a range. So, a lot of these things have happened, but the pressure was kind of already building. Another point that I want to make is if we were going to break down, the question is, do we break down before the event of the Fed or do we wait till after? I always kind of ask that question when you're at any moment in time. If everything moves in one direction before the news event, you always have to be careful that you're going to get a move back the other way. And what we could see is, say we are going to break down on the Fed. The fact is, when we were down here at this low, when you consider the fact that there were how many days we have, Thursday, Friday, Monday, Tuesday, with 4 days, and we're down sharply in that period of time, do we break and just rip through support and just go plunging to new lows before the event? And if anything, it's like, no, it's the probabilities would favor people are going to wait. They're going to let the news hit and then they're going to slam it. So you get to these spots when the market goes so far and then there's just no more, you're in a vacuum of catalysts. And that's kind of where we were on this pullback here. And you saw that the ECB came out today and they basically said, we're not going to, we're not going to commit to any more kind of rate hikes or anything like that. So if you just Google Microsoft or OpenAI, you can find this article. All right, so. But now these things have happened, and I also think it's important to realize that, now is not the time necessarily for people to be thinking about pressing. But let's look at the other thing we did here on TradingView. I want you guys, if you could, just consider following this. You can get alerted. It doesn't cost anything to just follow it and get your alerts to your email. But the other one that we did is the XLF, which is to me now kind of a spot where it's something a little bit more to think about. This is a weekly chart of the XLF, the financial ETF. If you go back on this thing, you're basically looking at levels that go back to, before the financial crisis. That was a high, right? This level. Look, right before COVID, we crashed, then we broke out, and then look how we've been holding it since. So from my perspective here is, financials have now they've really taken a beating. And the question is, where's the path of least resistance, from here? Is it new lows? I mean, is it? I don't know. I think when you look at some of these, they have a lot of bad news now priced in. Now, another thing that's interesting is here's the yield curve. Look at how much it's actually steepened in the last, week or so. So we've seen just crazy moves with bond yields and stuff. And, the market now, I'm not saying the Fed's going to cut rates by July, but the thing is that if we start to see the yields move in that direction, then they're going to move in that direction. So here's actually another TradingView chart that I use. And I have here this is the 2-year treasury yield. Now from my perspective, when you look at these things like the 2-year, here's the 10-year. I see now basically on the weekly charts, I see a bunch of nothing. Look at the dollar index. I look at this chart now, to me, this is completely without a trend at this point. You can argue whatever you want that the dollar's going to, I think now that no one really knows, and I think no one really cares. This was in many ways the big move in currencies. This was the big move in interest rates. And I think now when you really look at this from a historical long term, look at it like a monthly chart. I mean, these are major, major moves. And the question is, when you look at this on a monthly chart, this is going back to like, the 2007 or whatever. The question is, after moves like this, you get a whole bunch of nothing. You get consolidation, you get pauses. Maybe it'll go lower, maybe it'll continue higher. But usually after moves like this, you're going to get months of pausing. So my point is, what if the volatility now in currencies that we saw last year is over? What if the big move in interest rates is over? They can stay high, ease lower, whatever. But all these things slowly are fading away. And one of the things I've been basically saying, I think is the most, underappreciated trends this year will be just the return to normalcy. And if we see that with bonds not moving and currencies not moving, then suddenly we have a situation where people go back to stock picking and confidence can return to the market. And that seems to be kind of happening here. Each one of these aftershocks of the COVID thing is getting less severe. First, the market crashed on COVID, and then it crashed on inflation. But each one of these events is getting less and less severe. And to me, we're just seeing normalcy returning. That's really the story. And that's something I've been kind of talking about. So let's take a look now at the actual, sorry, I've got a bunch of things here. All right, so cover the things about the S&P 500. Today, all right, well, before today, the CPI was in line. PPI was a little bit cool. I mean, it's interesting to look at the food and the transportation costs are going down. If you just look into some of these things, like let's look, for example, at the Baltic Dry Index. This is a thing of basically shipping costs. Wow, wait a second. Wow, it came spiking back up. The point though was it had really fallen in the last, year or so. Wait a second, this is all. I'm not sure what I did to this. Anyway, I'm making sure this is really coming through correctly. All right, the point is that the data that we've seen has pointed toward a cooling of the inflationary trends. We had this fear that some of the revisions we were going to get that we had gotten, especially December and the Q4 revisions, they were looking scary, but that trend has not continued. And we see PPI cool, retail sales cool, the Empire Index from the New York Fed cool, today's Philadelphia Fed cool, all those things pointing toward cooler inflation. But what's interesting is jobless claims today didn't go flying higher. If any, no, they were actually slightly lower than expected. So we continue to see healthy job market, cooling inflation. The other thing today that was interesting was housing starts were through the roof, completely beating expectations, housing starts and permits. And then the builder sentiment yesterday was higher than expected. It was a third straight improvement. From my perspective, and I've been saying this, the home builders to me remain in a spot where it's just there's a lot of there's just so much. This is Lennar, DR Horton. The demand is pretty strong, and these are companies that I've said it many times. But the thing is, there's a significant demand. They can name their price. When the prices are not in their favor, they just don't build. This is a very interesting industry that trades at low multiples, that has a very strong structural demand in front of it. If we look on a year-to-date basis, let's look over here at the industry level ETFs. Year-to-date, let's see who's doing the best. Semiconductors, and there's home builders. On the list, they're pretty high up the list. So this is basically, the year-to-date performance, semiconductors, communications, tech, FDN, which is a weird ETF, but this is just an index. It basically is like internet stocks. It has like Google and all those names, Meta. It's basically an index of growth of internet stocks, and then ITB, home builders. So it's interesting on a year-to-date basis, semiconductors. Now what's interesting is, in many ways, this is a mirror. This is the opposite of what we saw last year. Last year, the NASDAQ got hammered. The NASDAQ was showing signs of breakdown before the market even crashed. This year is just the opposite. So we continue to see that kind of strength in growth names. Okay. All right, can you please share the workspace and radar scanner? All right, so I don't know if you wanted me to put it on the screen, or if you wanted me to show you how to get it. Like I said, if you go here and you follow, if you download these zip files, you expand, and then you basically import all the ELDs, and then you go to the workspaces that are in there. It will be that's how you can find them. If you have any trouble, email me at drussell@tradestation.com and I'll make it work for you. I like it when you guys ask me questions because we come up with cool stuff like anchored VWAP. You know, someone asked me about it and now we have it. It's available here if you're interested. I don't know much about it. I honestly have never used it. I look forward to learning about it. I'm glad we were able to make it available to you guys. All right. Key thing is the economic news, deflationary. Oil just completely smashed to bits, and that is deflationary. Crude oil. Now, I mean, I don't know. I mean, who really knows how real this is? How much of this was just a panic reaction? You know, Credit Suisse is like a $10 billion company, and it's like everything else got hammered on it. It's, you know, anyway, when you look at this drop in something like crude, I mean, this could be something a mispriced sort of thing of the market freaking out. So I mean, I'm not sure how Credit Suisse and, you know, Silvergate or whatever it's called, how does Silicon Valley Bancorp reduce Chinese and Indian oil demand? I'm not sure how it does, but this is the market does crazy things and it gives opportunities. So from my perspective right now, you know, these sort of things like the pullbacks in energy and stuff, some of these things are probably going to be giving us a position where from a shorter term perspective, it's, you know, these things could be, you know, irrational to the downside. Nonetheless, we have seen, I think here, a fairly clear trend here that the oil situation is has broken now, you know, to the upside in terms of inventories. The pricing is the tightness of it is squeezing. We have to see here. I mean, I'm not sure it's going to be like a one-way street. I'm not saying I'm bearish on oil. I think the thing here is that you know, you can probably make a fundamental case that oil needs to go higher. The key thing is that again, it's nothing. Just like the bonds, just like the currencies, this was the crisis that like ripped our faces off, and this is nothing. This is oil it goes back up to like, you know, 75 or 80. Who cares? The real inflationary shock that caused trouble, that's over. You know, for now at least, you know, this is now a kind of sideways chart. So the thing here is again, that was just my point here. We continue to see the inflationary narrative coming undone. And that I think is important for growth stocks, for NASDAQ, for chips, for Apple, for Qs, you know, for the software companies. So Microsoft gains on the OpenAI release. So yesterday they did something that I'm not even sure what this is. GPT-4. Today they announced that they're putting ChatGPT into Word and Excel, which would be great because honestly, I always struggle, you know, with these Excel formulas. I mean, honestly, I don't know. It's weird, you know, I'm not good at coding Excel. So the thing is I'm often trying to figure out how to do it. If I could just tell Excel, you know, total up these columns and put them in order and, you know, blah, blah, blah. And then, you know, if it's over this, then color this or do something. If you could just talk to like Excel, oh my Lord, can you imagine how great that would be? So, I mean, this is not a small thing. It's like the Ford Model T or something. All right. Meta, I mean, also, Meta is another AI name. It's not just that, but here you have a company that is, the thing now about these tech stocks is they have the ability to cut jobs and buy back stocks. Meta is doing it. United, now here's another interesting one. United Airlines, you know, these things come out right on top of each other. It's nice to see bad news from these sort of transports because these guys didn't see recession, you know, here, and now they see recession here. And if that's the case, then it also means less hawkish Fed. And then this thing, Illumina, I don't know much about this. It's like a biotech name that's been weak forever. So that's just something to kind of be aware of. But, you know, Baidu was another one, AI name. We did this one for TradingView. Go here to TradingView and look here. I'm putting a lot of these things are on TradingView you could follow. And Baidu, we did it yesterday. It had this one smash lower, and now today it's coming right back, bullish outside candle. It's interesting. You look at the Chinese stocks. Look at this massive bullish candle outside. You know, yesterday had that last beat down, and then buyers just came out of the woodwork on it. So basically, it's really interesting to see a name like this. When you look at the overall Chinese names, this is the overall Chinese ETF, like the KWEB or something. You know, this is under the 200-day moving average. And then you look at Baidu is like way above its, you know, well, for the most part above its 200-day. You know, to me, this is just one of these names when you really think about it. It's interesting. And they had a good earnings report in here somewhere. I think this was earnings, you know, so this is a company where these Chinese stocks have gotten just beaten senseless. You know, they've had a lot of reasons why. But at the end of the day, you know, investors like these names. China is one of the easiest narratives to understand from an e-commerce perspective. And it's something that is just like, I think, a very, it's been a very rewarding growth market when it works. And again, if the dollar stops rallying, you know, there's just a lot of things right now. And you can say there's a lot of fear in China, you know, about concerns about China, but the fact is, large institutions like stocks like Baidu, Alibaba, JD, Bilibili, whatever this, I mean, some of these names, I don't know. I think when you look at some of these, it's interesting to see what's going on. Now, another one I actually meant to mention was today, Adobe, good earnings. Now, this is one that we had kind of mentioned, a bearish trade coming out of here down to here. Good earnings today, but I mean, this is a name that is, you know, pretty interesting because they've had a lot of negativity around an acquisition they're doing. But, you know, the thing is this stock has just been, you know, destroyed. And if the Fed stops raising rates, you know, there's certain stocks you don't think about, or, you know, they don't talk about them on CNBC, but these were major growth stocks. The other one was PayPal. I mean, if you look at the upside, it's just ridiculous. I mean, PayPal at one point was one of the most valuable companies in the United States. And, you know, I'm not saying this one is necessarily, you know, good here, but the key thing is there's a lot of growth stocks. When you dig into these growth indexes, you find companies like Adobe. This is not a small company, and good earnings today. It's interesting to see this sort of thing coming together. The growth narrative seems to be kind of coming back here. All right, so this is just your typical sort of thing. I'm not even sure even how much of this even matters at this point. The cyclicals dropping on economic worries, and but I do mention communication and technology, which is basically the NASDAQ, because don't forget Meta, Alphabet are in the XLC. So we go over here, year to date, XLC, Netflix, Meta, Google. Those are the big ones. And then we got XLK, Apple, semiconductors, Microsoft, XLY as Tesla. So, by the way, last webinar, you know, Tesla went down pretty close to the levels we had cited. We had been talking about a potential test down toward the 160, under 165. We said back toward here, and it's pretty much where it came down to. So, you know, just something I wanted to point out here about Tesla. But still, the key thing here is that there's been this shift of growth. Now, I think we also have to be careful in the near term because, you know, when you consider market stabilizing here, there could be something of a shift also back to the financials that have gotten hit down so hard. Some of the things like energy that have gotten hit so hard. So at this point, just, you know, mindlessly buying tech stocks in a short-term sense might not be, you know, might not make a ton of sense. Could be some risk in that. All right, so I did a scan for things that had, just looking at different things. Now, all of these came from yesterday, so it's kind of hard to even know if they're valid anymore. But one of the things was the fact, like I mentioned, the NASDAQ had a golden cross, and we put that up yesterday. So I mean, the golden cross now it's ripping on that. But all right, so we did a scan where basically what we did was we looked for stocks where the 50-day moving average was above the 200-day, the 8-day EMA was above the 21-day EMA, and then the price was near the bottom of the Keltner channel. So in order to do that, we use this tool called Keltner pullback. So I'm going to now show this to you guys. You might want to go to your, if you go to MT main, go to price grid. Let's actually add it here. Let's go to studies, add. Now, this is in one of the ELDs that I shared at the top of the blog today. Keltner pullback. I'm going to put it at the end. Okay. So this is going to now basically, 0 means it's, if you actually, let me just show you, if you guys don't know how to do this, don't get too scared of code. Edit easy language. I put an explanation at the top of this of how it works. If you want to look at this, it basically, what this tells you is that, if it's 0, it means that the price is at the lower Keltner channel. So see A, see the price, this is the lower Keltner channel right here. So essentially, if we find things where the value is close to 0, that means it is near the bottom of the Keltner channel. Now, a lot of stocks can be like, I don't know, some financial stock is like under the Keltner channel, it's been beaten down. So, do we want it? Who knows? The point though is that this has the 8 days under the 21. So it's not what we would consider the kind of pattern we're looking for. So I'm going to just really quickly copy this window. I'm going to go over and create a new workspace really quick. I'm going to paste this. I'm going to go to Scanner and show you how to do this. I look every time I do market trends, the day before I have a scan that essentially does this. But I'm going to build it for you guys now. And basically, it does things like this. So I'm going to go here to Apps, Scanner. Where's my flashlight? So new one. Let's just call it. I just give it a name so it'll be at the top of the list. Let's just call it, Keltner pullback. I'm not good at necessarily naming stuff well. I always go to all stocks. By default, I have mine set to look for $1 billion in market cap, 500,000 shares. Those are going to be in here. I have those set as my default. Pretty basic. You can figure that out yourself. I'm not going to waste time with that now. Let's now go to indicator. Moving average one line. This will take a second. Hit OK. Go to greater than. Indicator, moving average one line. So this is going to find stocks that have more of a structural uptrend that then have a short-term pullback. Now I'm going to go to moving average exponential. Now I'm setting them first. I'm putting them in, and then I'm gonna actually add them next, and then go to moving average exponential. Okay. Now we want the 50-day simple above the 200-day simple. So that's just called move average one line. This is gonna be the simple moving average. So I'm setting the one on the left at 50 to the greater than sign 200. There's a find stocks from you with a 200-day moving with a 50-day moving average is above the 200-day. All right, that's good. Now we want the shorter term thing, moving average exponential. I like the 8-day above the 21-day. Some people use that. Use that for simplicity's sake. All right. 8-day exponential greater than 21-day exponential. Make sure it's set, for example, to daily. The cool thing about Scanner that a lot of people might not realize is you can scan on multiple time intervals. You can scan for weekly patterns in one line, and another line you can scan for hourly or whatever. Pretty cool. So just make sure you're looking at this 8 and 21. Also, remember when you're using exponential, that the exponential moving average for some reason does not automatically detect the number of bars. So you have to make sure that load additional bars is higher than the period you're looking at. So by default loads 200, but if you did something like 500 exponential, you'd have to adjust this value. All right, so that's going to find the companies that have the structural uptrend. However, you're going to find stocks that are way high in their channel. So let's now go to indicator, Keltner pullback, which is again, this is what I'm giving you. And then it's called Keltner range. And let's say less than, let's just give it like 0.2. And now let's run and see what happens. I'm going to also go here. I always do that. Right click, go to columns, columns, and then I'm going to add last run date. And I'm just move this up actually. All right, well, last run, all right, hit okay. So the reason I like that is because I often get confused with scanner, like which scan is running. See, it's down here. I want it at the top of the list. So it's going to jump to the top. See, there it is. Okay. But you have to add that, you have to add the column. So it's running. It's got in the easy language. Let's go back to our rundown and see what other points I was trying to make. So using this approach, yesterday it found Builder's First Source, BLDR. Oops, BLDR. Now, again, this is to me a very interesting company. This is one of these companies that nobody talks about, but this is a supplier in the home building space. So yesterday, you can see it was near the bottom of the Keltner channel. Yesterday, the 8-day was above the 21-day. You can see. Oh, actually, it wasn't. But you know what? The scan I probably ran the scan in the middle of the day. So I don't know exactly where it was. But I think you see the basic is pretty darn close. But here you see the red line over the 200 days. So this was essentially one where the 8-day was over the 21, the 200, the 50 was over the 200, and it was near the bottom of the Keltner channel. It identified the pullback. Interesting bounce today. That was one. Another one that's to me very. This could be a meme stock, so I just want to check it. But this C3 AI, this company claims to be an artificial intelligence stock. I'm not enough of an expert in AI to know if it's real. You always have to be careful when a new trend comes because people come out and try and hitch their wagon to the horse and say, oh, we're an AI stock too. So you gotta be careful of that. But this company has, it rallied on the whole ChatGPT surge back here, pulled back, rallied on earnings. It's been holding this level here. And at the time I ran the scan, it qualified. Another one that popped up on the list. What else do we have on the list? Mercado Libre. Now, this has been a very interesting company. I mean, I'm not sure really what to think of it. People don't trade it a lot, but when you look at this company over the long run, it has been, I mean, in some ways, it's like a Tesla. I mean, it has moved so much. It's just an interesting name, MELI, and it popped up on the list yesterday. It was under, I think I was looking for stuff that was under 0.5. You can see here, this is the middle of the Keltner channel. So it was probably somewhere kind of down here. Anyway, so let's see now what it gave us. Keltner pullback, the 16th. Here we go. All right. So let's see what it gives us. I'm going to set my symbol linking to this teal color with the global cyan. All right. Let's see what it gives us. Well, it's probably getting acquired. I also like to sort by market cap and just see what it gives us. LIN. This is a weird chemical company, not an actively traded company, but again, it's under. You can see here that its Keltner pullback is, under 0.5. MPC is an energy refining company. So this is just a scan. And the nice thing about this is I want to just tell you, it uses this Keltner pullback that I created. And basically all I did to do this, if you look at this, you'll see it has these inputs. It's the same inputs as the Keltner channel. All I did, and this is a great thing about TradeStation, is you can just go and basically just mess around with the code and add stuff. So go here to easy language. What I did was I took Keltner channels. So this is basically how I did it. I right-clicked on Keltner channel. I said, go to edit easy language. This is the original Keltner channel. I then went to save as, and I saved it as Keltner pullback. And then what I did was, you see all the inputs are the same. All I did was I basically, I just commented out these plots. And all I did was I added these lines right here when I basically said, here's the upper band, the lower band. Let's find how far they are apart. So I commented this all in for you guys so you can kind of see, how you can just adjust stuff and put them together. And I think you can see here the combination of using the Keltner channels with things like moving averages, you can start to find some interesting stuff. I have scans like this set to go every single day. So when I'm getting prepared for market trends or I'm looking for something for TradingView, I just go to my scanner and I basically just look for the results. And then these things are just waiting there for me. And you got to realize the kind of market you're in. But just wanted to kind of show that to you guys. Let me just close this so I don't make a mistake. One thing to be careful of is don't change the original code TradeStation gives you. It's better to save as and then mess around with it. Because if you don't want to break the code that comes from TradeStation, and you can if you're not careful. Please save the scan settings and share with us. All right, well, I cannot share a scan, but here's what I'm going to do. Take a screenshot of this. That's it. I'll take a screenshot of it. How about that? Let me find my Snagit. All right. You have my email. I'll shoot it to you if you guys want it. Let me get back to my rundown here. All right. So every week I try and look at a stock that is doing something interesting. It's not necessarily like something that wants to be followed. In fact, if I remember correctly, AI was one that I had kind of talked about recently. I had mentioned, I think it was one of our movies of the week earlier. So anyway, this one though is interesting now, MAXN. As the volatility comes down, as if this trend continues with the VIX coming down and confidence returning to the market, there are a lot of small companies that have been left for dead, and some of them like this are kind of like, is this, what's going on with this name? It's kind of interesting. And there's a lot of these stocks that people have just forgotten about that are starting to kind of do stuff again. So I think it's just kind of interesting to to bear that in mind. And this is an interesting one that kind of came up on the list. The smaller companies, I've said many times, the market goes through cycles. It goes through, a complacent drift that ends, and then you get volatility. Then you get a coordinated, correlated rebound when the whole market just rallies together. Like, so say the market rallies and, the Fed is done and blah, 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 trying to pick stocks in that environment can be difficult. You might buy the one stock that doesn't rally. And very often when the market has a broad recovery, sometimes the leaders do well and sometimes they don't. Sometimes the garbage stuff that was most trashed rallies for a day or two and then something else rallies. So, one of my approaches is to focus on, if we're going to get a big overall market recovery, to focus more on the bigger indexes. But then as that passes, we enter a period when volatility comes down, the market moves less, and individual stocks start to outperform, especially when the VIX starts going back down. Now, I haven't looked at the VIX for a few hours, but 20 has been an important number on it. But I mean, if you look at the VIX here, I don't know, another weekly low. I mean, again, this is what the return to normalcy looks like, and that kind of seems to be, I mean, essentially what we're kind of getting here. So, we're getting to this spot when the VIX starts, remaining lower, the individual stocks are going to be where people come back to, that sort of thing, and some of the smaller sort of names. And that's when some of these scans like I just showed you are so interesting, because that's when you're going to start to find those companies that start to do, big sort of moves on their own. And some of these scans can help find it, like this one. I'm trying to remember how I came up with this one, but it was a similar sort of, it wasn't the Keltner channel. I do another one. It's just a rally and pullback. I look for a stock that is like, it's up a lot in one period of time and then pulled back more recently. And that's essentially, there's different ways I do it. I have a bunch of these scans to do it, but you can do something like this in Price Grid. You basically say, I want to look at stocks that are up a bunch in the last, the last 3 months, that are down a bunch in the last week. So here's one right there, booking. So you look for green in this column and red in this column. And what do we have? I'm not even saying this is, but look, classic bullish flag. I mean, the market trends workspace has it right here with a couple of clicks. I'm looking for this up and the shorter term down. And I do it by going sort on 3-month and then look for red. Very simple. RCL. How about this one? I don't know about this one. I mean, I don't know about a chart like this. It's I don't know. I mean, this is not as, but the key point though is this can be done very quickly and very easily. And that's essentially how I found something like MAXN. All right, let's look at some of my other points. I just note down some things here. They had a good earnings report on the 7th, and then there was some interesting sort of commentary that came out of it. This company was spun off from SunPower. And, I mean, the whole, green energy thing is just a narrative that remains with us here. And, it's likely to be something that kind of continues for the foreseeable future because, as it's a growth area. And if you look at it, we know we have the IRA, the Inflation Reduction Act. These are things that put significant money into the solar energy space. So look at the TAN. It's really interesting to me. I mean, I don't really know per se, the individuals of these companies. Some have exposure to California and a subsidy problem here or there. But the thing is this has not done very much. It's very interesting with the market getting hammered and stuff. This thing is just sitting and doing nothing. So from my perspective, it'd be interesting to watch this and to see. But, I feel like something is going to happen. We could see, some kind of, I'm not going to predict something's going to happen, but we'll watch. And if we start to see this like moving over 80, we start to see, some more outperformance broader across the space. The solar energy, when you look at it, it is actually one of the top performing. I mean, they had a huge move in 2020, but let's see. I mean, if you look at this on a kind of longer term, you can see that it's kind of basing. It had this big swing and now it's tightening. Let's keep this on our radar because this is a growth area. This is an area, with the VIX coming down, small growth stocks. This is the sort of area where people could be looking. So TAN has a lot of Chinese companies. All these things are just true about it. And that's one of the things to be aware of. But the thing is if people start to come back to solar, some of these things. So I have alert set for myself if this thing goes back over 80. And I just got it on my list. And like I said, for me right now, the if anything looks to me the highest kind of probability in the near term, I mean, the semiconductors continue to run. And I mean, it would be to me just the financials here look like, a spot where, from a couple of weeks, perspective, it looks to me like, this is an area now where, it's more of a kind of odds of a bounce, but I am trying to adjust right now since this morning, and we were looking at that thing in the queues, and a lot of my expectations for the market to kind of rally, led by the Nasdaq. Now it's happened. I have to start looking for other opportunities. But just speaking of this, a non-Chinese solar company is First Solar, and this was one that is, it has a lot of interesting things coming together. So I wanted to just mention that Maxion was the one that came up. Now, of course, we have quad witching tomorrow, consumer sentiment, not sure how important those are. The Fed decision is obviously the end all be all at this point in time. And that's the focus where everyone is. Now, I showed you this Keltner pullback. These are the main things I want to show you. Let me see any other. I wanted to mention one or two other things. Baidu. All right. These are not very glamorous, but I mean, these banks like Banco Santander, I mean, these guys trade for like the multiples on them. Santander and BBVA, the multiples are so low on some of these European stocks that they were really outperforming. One of the ones on our list, EFA, this is like the global sort of index. This was outperforming until this thing happened in the last week. And the thing is, if the dollar just stabilizes, you're looking at these European stocks now that just trade for, and I've heard a lot of people say this, the valuations on them, I mean, are just, a lot of people find them, more interesting and stuff. So, global stocks are very boring. They're not very, glamorous. But the thing is that a lot of these trade for very low multiples, and they've been, unpopular for so long that it's something to maybe just kind of think about. So that just was interesting to me. I was looking at the valuations on some of these names. Another one on my list was PagerDuty. This had earnings say. This was another tech stock that, had an IPO, had a big rally, and it's gotten hammered since. Good earnings today. Well, actually, let's show you this pattern I've seen before. Let's go to studies, add study MACD. I've seen this before, and it's something to be careful of. When something kind of rallies like this with falling MACD, you're often going to get a period of, see, this will prevent an immediate rally, but chopping in this area, and then in a couple of weeks, something interesting could happen. So I just seen this pattern before. When you get a stock that rallies against, usually it's an earnings report, rallies against falling MACD, hits the wall, and then 3 weeks later, 2 weeks later, buyers potentially return. So I've seen this pattern before. PD, PagerDuty. The last thing I'm going to show you, go to MTMS, another workspace I've given you guys. Let's look here this morning. Remember, this has 3 signals. We want 2 of the 3, or we want to think about following when 2 of the 3 point in the same direction. Stochastics were oversold. That's bullish. 50-hour moving average was essentially rising, where there's red line. That's bullish. MACD was just coming down, but wasn't much. This was a bullish signal this morning at the open. It also had bearish signals. For example, I mean, right here, it was overbought on stochastics, and the MACD died right here. This is overnight, but still, it shows how this works. So remember, this workspace, it has to be the ES hourly. You cannot use SPX for this as your SPY. It has to be the ES hourly. You're looking for 2 of the 3 indicators to be going in, to give you a signal. And in this case, like the stochastic oversold is considered a bullish signal. Moving average rising or falling is a bullish or bearish signal, and then MACD. And if you have 2 of the 3 pointing in one direction, often the moves go a certain way. And the last thing, just remember, MT breadth, we saw it again, but this is now becoming a very interesting pattern. I'm going to figure out a way to go back and back test this to see how it actually works. But it's pretty interesting to see, this pattern working out again. So that's what we got. Hope everyone has a great day. Don't forget to check out what we're doing on TradingView. A lot of the kind of ideas that we're able to share in terms of technical analysis, we do post there first. So you can go and just get a free account and get notified when they come up. And if you go ahead and shoot me an email, I'll send you that scan. Last question, someone asked about NEO. I haven't looked at this name in a while, and my only thought is, when you have a broken growth stock, just don't mess with it. These are things that are like, they're like one-hit wonders. They work, and when they stop working, just forget about it. So, I have no idea about NEO per se. Let's see. But from my perspective, the one to me now that is grabbing my attention is Baidu, in terms of the Chinese names. That's what I see right now. So I hope everyone has a great day, and I will see you next week. Take care.